Canada's economy is collapsing, but we're not the only ones. Business confidence has collapsed, consumer spending is tanking, and the government is panicking. A global catastrophe is unfolding, but fear no more because on this channel, we always offer our strategy to beat the market by sharing our stock picks. In this video, I will share my top Canadian stock picks for 2025. Stay tuned to the end of the show to learn how you too can beat the market. Small business optimism in Canada collapses to a 25-year low, and this is a major warning sign because what it means is the Canadian economy is headed right into a recession. Because when businesses lose confidence, it's all about the consumers have to cut their spending. According to Canadian Federation of Independent Business, the Business Barometer Index fell to 25 this month, according to a flash poll of over 1,000 firms taken in early March. That's the lowest reading on the record dating back to 2000. What we can see after the U.S. presidential election is that confidence not only in U.S. businesses soar, but in Canadian business as well. But look what's happened since it plunged, and again, this is a massive warning sign because what it's telling us is Canada's economy is headed right into a recession. The question remains, are we going to drag the U.S. down with it? Nearly 60% of respondents expect their business performance to be somewhat weaker or much weaker 12 months from now, a similar proportion of March of 2020 when the shutdown of pandemic began. Firms expecting for inflation over the next year are also rising as average price plans jump 3.7% in March from 3% in February. The historical average is 2.2%, so at the same time businesses are projecting their business and the economy are going to slow down, they're going to raise their prices, and this is a very dangerous sign, and everything points that we're headed into a stagflation. According to TD Economics, the effective tariff rate rises from its 2024 level of around 2.5% to 14% in early April and remains there for 6 months. For demographic, U.S. immigration is expected to slow to 750,000 in 2025 from 2.8 million in 2024 and 500,000 in 2026. Canada's population growth is expected to ease from nearly 3% in 2024 to 1% in 2025 and 0.2% in 2026. It's not just investors whose moods have darkened. Consumer and business confidence measures have also come off highs from when Trump was first elected. Canada has borne the brunt of President Trump's tariff action despite having one of the most equal trade relationships of any country. This leaves us skeptical that tariffs can be avoided no matter the negotiation tactic. A wave of Buy Canada national pride has been unleashed, but it won't be sufficient to offset the direct negative impacts to the outlook. We expect Canada's economy to tip into a recession this year. Weaker demand is likely to tip Canada's job market into net job losses in the third quarter, but unemployment rate rises only marginally as lower labor force growth creates a powerful counterforce. Under Canada's recent immigration policy shifts, the labor force grinds to a halt in the second half of 2025. The unemployment rate is forecast to rise to 7% in the second half of this year. The declines follow a 2.6% spike in sales in December that coincide with the start of break in sales taxes on some items. So the first back-to-back decreases since mid-2023 May point to mounting pressures on consumption from consumers. About the U.S.-Canada tariff war, here's what's interesting is we saw Canada's consumers do the same thing, and that was front-run the tariffs. But despite the fact got a break in sales tax, it wasn't enough to spur consumption now. If you think about what we just heard from Nike, they said that they discounted a bunch of their merchandise and it didn't really help. So what we're seeing here is prices are rising and paychecks are shrinking, meaning consumers can't afford any price increases, let alone where they're at today. The Bank of Canada reduced borrowing costs for the 7th straight meeting last week, meaning rate cuts are having absolutely no effect on consumption. And this is something I want you to understand. Because we talk about how central bank policy makes no difference to the real economy, to the real consumer, and here's the evidence. 7 straight meetings, they've been cutting rates, and what happens, consumers cut spending, and surveys show that Canadians are increasingly worried about their job security and financial health and plan to spend more cautiously. The federal government temporarily waived sales tax on some purchases between December 14th and February 15th, including alcohol, books, and games. Retail sales sales surged at the end of last year, shoppers front-run the tariffs and took advantage of the break before holidays. But what happened after that? What did we see? Demand fell. So what does this tell us? Sales tax breaks, they don't work. Price cuts, they don't work either. And cutting the funds rate, well, that doesn't have any effect at all. So what do we do, eh? For me, I love to buy stocks when folks are scared. When extreme fear happens weeks ago, I bought Suncor Energy, ticker is SU. A stock used to be owned by Warren Buffett. It operates through oil sands, exploration and production, and refining and marketing. It also owns Petro-Canada. You can't go wrong owning gas stations during a stagflation time. I also bought Canadian National Railway Company. Ticker is CNI on New York Stock Exchange. It's a wide moat business with a high profit margin. Cash flow machine is traded cheap compared to the market. Both of these stocks pay nice dividends, so you always feel rewarded to hold them, even if they do nothing. Thank you for watching. Hit the like button and comment below if you are a Canadian that watches this channel.